This is a download from BFM 89.9, the business station.
Good morning, Dodge. So the IMF has come out to say that risks have uneven and weaker than expected global recovery have increased, and as a result, the Dow saw its worst loss of 2014. Will this persist, you feel, or is it a temporary correction? Are we in for a roller coaster for the rest of the year?
Good morning, Nadia. I'm afraid we're going to be in for a roller coaster for the rest of this year. We're dealing with an aging bull market that must be played very carefully. We really haven't seen the climax on the downside yet, and what we're really watching for is what is called a 90% downside day, where 90% of the volume is on the downside. That hasn't occurred yet. We are getting Monday to today in your time is going to be very interesting for us because it's a holiday, so not everybody's going to be back, so there can be a lot of volatility. The market could go down, and if it goes down first, then we'll see a much healthier rally. But if we rally from here, we really don't have the strength to follow through, so there'll be more to the downside. But that's very short term. In terms of the longer term, we're seeing that the economic and fundamental performance that is beginning to creep in now is not as positive, and it's coming under question, and that's going to result in a greater reaction to geopolitical uncertainty and news events that are happening now. It can be reversed, but for now, until we get some real climax in the selling and some more positive news on the economic side, the questions that will be asked of the market will be more negative than positive.
When you talk about geopolitical shocks and, of course, external stuff going on in the news, things like the Ebola outbreak, do they have that much impact on the markets or at least sentiment in general?
Oh, that's a tough one. It's a tough one because those who are trading the market are individuals, and if they are near an outbreak of Ebola, and there are now more places than before, then yes, it does affect it. But overall, we're beginning to see reactions. Okay, what stocks are going to benefit? Will pharma benefit? Will gloves, like plastic gloves that you put on to protect yourself, will they benefit? Those are questions that are being asked from a market point of view. But at some point, as Ebola, the danger of Ebola gets stronger and becomes more real and more personal, that possibility probably will not be as strong in the market as it is now.
There are also reports, though, that the Fed may actually slow tightening if all these worries cumulatively continue. Do you feel this will be the case, or do you want it to be that you just want to get it over and done with and just have rates being adjusted?
It could very well be the case because it may have to. I would prefer for it to go forward. It would be much more positive, constructive. And if the Fed continues to keep delaying, then the power it has will start to diminish, and the reaction to their moves will become less. And that really is a danger. But for now, we still see that by the second quarter of next year, interest rates will start to rise. And the futures, even on Friday, the futures were indicating that interest rates by the end of the year would be 50 to 75 basis points. So far, so good. But again, the questions that are being asked are much more negative.
Chancellor George Osborne in the UK also warned that Eurozone worries, which most recently saw Germany register a sharp drop in exports in August, will hit UK's recovery. What's your comment on this?
I agree. The UK will be the fastest growing economy this year, but both the global economy and the Eurozone are slowing down. The Eurozone unemployment remains around 11% across all the countries, which is a very weak position to have if you have to weather a further deterioration in economic performance. And now we're seeing a cutback in growth forecasts for Germany as well as Italy and France. Since 40% of the UK's exports go to the Eurozone and manufacturing output is beginning to fall, Britain could face a real negative downturn. It's not totally powerless. It can lower taxes for business. It can encourage people to work. It cut welfare, etc. But the fact that Germany has been one of the fastest growing developed economies over the past 12 months and now it's been the exception to the weakness, but now is no longer, that is real. It's a real concern. It's troubling. The French budget for 2015 calls for a deficit as well of well over the 3%. And now the Eurozone is going to have to come up with a response to the weakening economic outlook. All this just raises negative questions. For now, everything's fine. There can be good positive responses, and the economy can turn around. But for now, we have to be very careful. And the UK will be a very good harbinger because it's been so strong.
Tensions in the Hong Kong and this part of the world continue to simmer. However, now there's been a few days and there's been a few back and forth in negotiations. Do you think it will impact China's growth?
It could not, yeah. From what I understand, the Blue Ribbon movement has been allowed by the police to march into the student encampment. The whole process now is being ratcheting up. It would be good to get this over with from an economic point of view, and talking about the philosophy and the principles behind it, that's a very different conversation. Longer term, it won't, but shorter term, it does put the ability of Hong Kong and that area to continue to grow and will be under considerable further probability of a lowered economic outlook.
Following Alibaba's debut, do you think investors now have IPO fatigue? Because some didn't do as well, but I was wondering whether it was just the general market that made sure that their debuts weren't so stellar.
Well, it is the general market, but if you look at Alibaba, it's back down around 85. So, yes, there is some tiredness that's being created by the market. The upside potential is not as clear over the short term. And when IPOs come out, Nadia, that's when the activity, the action occurs, and that's when you expect to see stocks go up, perhaps not 20 to 25%, but to continue above the first trade and clearly above the IPO price. But now that the market is undergoing some weakness, we're not seeing that anymore. And so, therefore, there is some fatigue, and it does bring into question about future IPOs over the next 4 to 6 weeks, and whether or not they can have the follow-through that's needed to create the favorable environment for IPOs.
That was Dodger Dolan, Chairman and Chief Investment Officer of Lander Fuse Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.